Good evening, ladies and gentlemen. Welcome to yet another exciting edition of HR Mentorship Series. Today, we have with us Tunde Wale Temawo, who is coming back the second time, which is a testament to the fact that he so wowed us the first time and is back with us today. And is going to be teaching or sharing with us on a very specialized but contemporary area, accessing mortgages in Nigeria, a guide for HR practitioners. Accessing mortgages in Nigeria, a guide for HR practitioners. Permit me just to read a little about his profile for those of us who may just be meeting him for the first time. All right, Tunde Wale Temawo is a graduate from the prestigious Obafemi Awolowo University, where he graduated with a Bachelor of Science in Building, and he has had varied work experience. He is HR MP certified. He's also certified with SPHRI, which is with the HRCI body. Okay, has a Master's of Business Administration in Human Resource Specialization from University of Leicester. He has held various positions, worked with Zenith Bank, he worked with KPMG Advisory Services for well over 7 years. And in the last 7 years, he has been the head of Human Resources and Admin with the Nigerian Mortgage Refinance Company. You will see that he has both the HR competence and the industry-specific competence to lead us in this conversation. As always, if you have any question, please feel free to drop it in the chat box. At the end, you may also raise your hand. Our facilitator today will unmute and, of course, let you speak. All right. Thank you so much, Wale Temawo. Please, you can take over control. Thank you.
All right. Thank you so much, Yemi. It's always a pleasure. It's always a pleasure doing this. I hope you can all hear me. I believe so. All right. So, yes, what we're going to be talking about is something that I believe is of importance to everybody, not just HR practitioners. I mean, I put HR practitioners in the title because this is primarily a forum for HR practitioners, but I mean, this goes beyond HR practitioners. And I believe that there are people who are also interested in this topic, who are most likely not HR practitioners, but who are also attending or will be joining us later on at some points, you know. So it's something that cuts across every strata, whatever your profession is. So I've titled this Accessing Mortgages in Nigeria, a guide for HR practitioners. But please, like I said, it's not just for HR practitioners, but it's just because this is a forum for HR practitioners. So let's get into it. My outline is what I have on the screen here now. I'm going to be talking about, what are mortgages, you know, just to get us to understand mortgages and some terms that you will hear around the concept of mortgage. Also to look at the mortgage ecosystem in Nigeria. How does it work? How does that industry work? Who are the various players in the mortgage ecosystem in Nigeria? What does each one of them do? You know, and we'll also be looking at the company where I work. If you had listened to the introduction made by Yemi, I currently work with the Nigerian Mortgage Refinance Company, NMRC. Some people you may be hearing about that for the first time, and there are people who have heard and they're like, what exactly do you guys do? Some people would ask me, okay, how are you different from Federal Mortgage Bank of Nigeria? So we'll talk about NMRC as well in a bit of detail. And then we'll look at what are the various options, you know, available for a Nigerian worker, somebody who is working and earning pay in Nigeria, to own a home. What are the different options that are available? Of course, mortgage is not the only option available for you to own a home. There are other options as well. We're going to look at those options. But of course, the focus of our discussion this evening is on mortgages, you know. So after looking at different options, we will look at what are the impediments to accessing mortgage. Mortgage penetration in Nigeria is pretty much low compared to the West, Europe, US. I'm sure a lot of us have friends who relocates abroad, and in 2-3 years, they are showing you pictures of homes that they have bought, you know, and these people have worked in Nigeria for years. They didn't have, some of them didn't even have land, talk less of getting a home, but they moved to Canada or they moved to the US, and in 2, 3, 5, even though someone who in a year bought a house in Canada, you know. So what are the, why is it not happening like that in Nigeria? And most of those houses are, in fact, they largely buy homes on mortgage in those climes. If you're buying cash down, then you'll be subjected to a whole lot more checks in terms of money laundering and all of that, because those are credit-driven societies. So buying cash down, it's like, boy, you must explain where you got all that money from. So we'll look at why it's not happening the same way in Nigeria. And then we'll look at what are the benefits of getting the mortgage, because, you know, mortgages seem to have been demonized, so to speak, in our environment. Mortgage, say, you know, as Yorubas will say, you're just packing debt on yourself and all that, you know. But there are benefits to getting the mortgage, which we will look at as well. And then I'll wrap this up by speaking directly to HR professionals on this call. How can you help your staff, you know, to own homes, especially through these routes of mortgage that we're looking at? So that's going to be the outline this evening. I guess we'll be able to do this, say, in about 40 minutes or thereabouts, and then I'll take questions and from the floor if we have people who have questions. Okay, so let's get started. Understanding mortgages. What are mortgages? Pretty much at the very basic, simple definition, a mortgage is a loan, ideally long-term, and I'm going to explain what I mean by that. I'm saying ideally long-term. It's a loan, ideally long-term, taken from a lending institution. So it could be a bank or some other specialized lending institution for the purpose of home acquisition. So if you borrow money from a bank to buy a car, what you've taken is not a mortgage. You know, they have all manner of loans that they call home refurbishment or whatever, or asset acquisition loans. Some give you loans to even do marriage and all of those things. But a mortgage loan is specifically for the purpose of home acquisition. So the home that you acquire, so these are things that make a mortgage different from other types of loan. Number one is the tenor. Ideally, mortgage loan term. Now, and I'm going to talk about that by the time I'm talking about NMRC, where I work, and why NMRC was established. A lot of times you see some banks will tell you they are doing mortgage. You approach them, I want that mortgage. What's the tenor? Tenor is how long is the loan for? What's the, you know, overall life of the loan? And then they will tell you tenor is 5 years, and they call that a mortgage. You know, that is ideally not a mortgage. And I'll tell you why the banks would rather give you what they call a mortgage, so to speak, for just 5 years. We're going to talk about why that is and it's not really their fault. We'll explain why that is the case with them. But ideally, a mortgage is a long-term thing. When you say long-term, you're looking at 15 years, 20 years, 25 years, 30 years, you know, facility for you to acquire a home. And the home that you have acquired, or that property that you have acquired, it serves as the collateral for the loan that you have been given, which is why there is something called foreclosure, in which case, if you have defaulted over a period of time, the lender can come and foreclose on that property, that is, collect that property from you, because that is your collateral for accessing that loan. So that's basically what a mortgage is. I'm just trying to make this as simple and basic as possible. Now, there are some other terms. If you've tried to access a loan before, or you've taken, a mortgage before, you've taken a mortgage, you probably would have heard about some of these other things, even if you've not taken. But if you've actually been interested in the subject of mortgages, you would have heard some of these terms before. So I put some here. This is not exhaustive. There are a whole lot of other terms out there that are related to the whole concept of mortgage, but I just put this four here for us to talk about. Number one is fixed rate mortgage. So what is a fixed rate mortgage? As the name suggests, it's a mortgage that the rate is fixed over the life of the loan. It doesn't change. So MPR goes up, MPR comes down, you're locked in at that rate. Now you could say, oh yeah, that sounds good now. Especially this Nigeria where rates keep going up. You know, this year, I think CBN has raised MPR like 3 times or so, or at least 2 times this year. So rates have been going up. If you have a loan with a bank, I'm sure they would have written to you at least twice this year to tell you that, sorry, because of the increase in MPR, we have to revise your interest rates. But your fixed interest mortgage locks you in at a particular rate. It looks like that's good. But hey, what happens if rates now crash? What if rates come down? You've locked yourself in at a particular rate. So it's neither here nor there, but I think in Nigeria, with our own peculiarity where the usual movement is up, right? It hardly comes down. It may actually be safer for you to lock yourself in, to lock yourself into the fixed rate mortgage. Just a minute, please. I'm trying to toggle this back to. Okay. Yeah. So yes, so in Nigeria, where rates are usually, the direction is usually up, it may be, more beneficial for you to lock yourself into a fixed rate mortgage. Then there is the adjustable rate mortgage, which, as the name also suggests, means that your rates fluctuate as the market, changes. As things change in the market, that is how your rates as well will change if you go for this particular type. So this is a mortgage with an interest rate that varies depending on movement of market rates. But there is a bit of a twist to it. Borrowers will typically pay lower rates for an initial, so there is a period they call introductory period. I don't know how long that lasts. I guess it depends on the mortgage institution or the lender you're talking to. So that could last, for a bit of time where you are paying a rate that is even lower typically than market rates. So after you enjoy that your honeymoon, so to speak, period, or your introductory period, then the rates go up to the market rates. But that rate will respond, to movements in the market. People in the West, like this kind of thing, really, because typically rates can go up and down, and especially if you know that you are not in it for the long term, you go for the adjustable rates kind of mortgage, because okay, I think I can quickly get out of it as fast as possible. So that's the adjustable rates mortgage. Then equity contribution, down payments. I'm sure people have been, especially when PENCOM came up recently with the new guidelines that you can access a portion, that's 25% of your RSA balance, as equity contribution. So what is equity contribution? Typically, if you want to buy a home and you want to take a mortgage, the mortgage lender, we could be a commercial bank or a mortgage bank. So I also want us to establish this. When we talk about mortgage lending, it is not just mortgage banks that provide mortgage finance. Commercial banks also give mortgage loans. So we need to, get that right. It's not just mortgage banks. Mortgage banks are just specialized banks licensed for the purpose of, doing the business of mortgage. But there are also commercial banks who have a portion of their lending portfolio dedicated to mortgages as well. So, which is why we will typically use the term PML, primary mortgage lender, rather than just say the primary mortgage bank, because not all mortgage lenders are mortgage banks. So the bank will typically expect you to also have a skin in the game. So if the value of the property you want to buy is, let's say, 30 million naira, you don't just go to the bank and say, give me 30 million naira. They're not going to give you 30 million naira. You are expected to actually put down a down payment or an equity contribution. Typically in Nigeria, most banks or most lenders would ask you for between 20 to 30% equity. So let's go back to our example of you're buying a house that costs 30 million. So 20% equity means how much? You need to drop 6 million. So that is your equity contribution. That means you're dropping 6 million or 20% equity, and you are borrowing 80%, which will be 24 million in this case. So that's what equity contribution or down payment is all about. And any lender will typically expect you to drop that as well. Now, you can, even if the bank says equity contribution is 20%, You can do more than 20% if you have more than 20%. What that just means is that you are borrowing less. So it's actually good for you if you're able to do more than 20%. Then there's something called loan to value ratio, LTV ratio. What does that mean? That's the percentage of the loan that you have taken as a portion of the value of the property. So we'll still retain this our 30 million naira house. I'm going to be using that for much of my examples this evening. So the house is 30 million. Your equity contribution was 20%, which is 6 million. So now you are borrowing 24 million, which is 80%. So that means your loan to value, that is the loan you have collected against the value of the property. You collected a loan of 24 million against a house that costs 30 million. Your LTV is 80%. I'm sure, I want to believe we got that. Maybe I should quickly go over it again. Loan to value ratio is the percentage of the loan that you have taken as a proportion of the total value of the property. So the property is 30 million, you borrowed 24 million. That means your loan to value ratio is 80%. These are things that the mortgage lenders actually work with, when they are doing their own computations and all that. So let's move further. I believe these are quite clear. So the Nigerian mortgage ecosystem, who are the players? What does the entire industry look like? And that's what I've tried to put here. And so this looks at the various participants in the mortgage sector in Nigeria. At the base, you have the consumers, you and I, home buyers or home owners. Those are the consumers. You are the ones consuming mortgage, right? Then, just above that are the real estate developers. Now, the real estate developers, you have a lot of them in Nigeria. If you live in Lagos, if you go down the Lekki Express, you see all sorts of developments springing up on that axis. If you live in Abuja, in fact, the whole of Abuja is almost a construction site. Estates are popping up all over the place. So those are being built by developers. Now, these developers could be private, they could be governments, because government is also in the business of developing houses. So we're going to look at it. So the private sector players are your private. I'm sure some of them have come to your office. Some of them have given you flyers in traffic that they are developing a property somewhere. There's a trick that most of them use. They will say for as low as, I'm sure you've seen that thing before, maybe on a billboard, for as low as 200,000 naira, you can become a house owner. You think, 200K, I can own a house. Now, lie. It's just maybe that's the cost of buying from them. But it's just a trick that they all use, in their marketing these days. So you have the private developers, a whole lot of them. Now, that industry is actually not regulated, to the best of my knowledge. Anybody, the ease of entry and exit is quite easy, as long as you can access funding. So the major barrier many of them have is probably funding. But you have somebody who has a lot of money, doesn't know what to do, they start building estates. They go into real estate. As a matter of fact, if you've done courses around AML, CFT, anti-money laundering and counter-terrorism financing as well, they would have told you that a very attractive place for money launderers to put their money in these days is real estate. So somebody has probably done Yahoo or has acquired money through some fraudulent means, and they want to clean it. They want to give it some semblance of legality. They start building estates. So there are quite a lot of them like that out there. It's not regulated. So you have a lot of private developers, which is why if you're going to buy from any of them, do your checks very, very well. Now you have the bigger private sector players, the likes of UAC Properties. I mean, everybody knows UAC. That's one of the biggest companies in Nigeria and one of the longest standing companies in Nigeria. Union Bank too used to have, I'm not sure if UBM Property still exists, but Union Bank too used to have UBM Property as well. So those are the private sector players in that real estate development segment. Then you have the government operators, e.g. Federal Housing Authority, FHA. FHA has estates across the country. Festac, for people who know Festac very well in Lagos, Festac is owned by FHA, owned and managed by FHA, Federal Housing Authority. In Abuja, Gwarimpa Estate was built by FHA. Now said to be the biggest estate in West Africa. It was built by FHA. So FHA has estates all over the place, and they also sell. So it's owned by the federal government. So that's the government operator in that real estate development space. You also have the Federal Ministry of Housing. Federal Ministry of Housing also builds. So you see all these low-cost houses that they say, oh, federal government is building low-cost houses in different places. They are usually handled by the Federal Ministry of Housing. That's also playing in the real estate development space. Then you have state governments too, who own their own property development companies. The very popular ones, OPIC in Ogun State, LSPDC in Lagos State as well. And different states to have their own housing or property development companies who all play in that space of real estate development. So if you want to buy a home, typically you'll be talking to any of these people, either a private developer, who could be just some guy who has found money and is putting up an estate, or you are talking to your UAC or your UBN. And if you're dealing with those sort of people, like I said, shine your eye very well, do your check. Some of them are they've built a reputation over the years. I mean, without trying to do adverts for anybody, I'm not going to mention specific names. You see them around, their track records, so if you want to buy a home, you can actually talk to any of those people and be sure that you're doing your proper due diligence. And then the government-owned ones, the FHA owned by the federal government, Federal Ministry of Housing, and your various Lagos or Ogun State or different states owned property development companies. So those are the guys that play in the real estate development bits of the ecosystem. Then let's move up to the people that provide the funding. They say, oh, ni koko. So those that actually put the money on the ground. Now, the financing can be split into both the primary market and the secondary market. So the primary market is that one that is readily available to you as an individual to walk into and to apply for your loan. Okay, somebody is dropping a name of a private developer. Yeah, there are a whole lot of them too that's operating in that space. So the funders, so in the primary end of the market, you have your primary mortgage banks. I'm not sure how many of them there are in Nigeria now because they've also undergone some round of recapitalization and all that, but there are a whole lot of them, out there. I'm trying as much as possible not to do adverts for anybody this evening. Then you have your commercial banks, 25 commercial banks. We still have up to 25. Some have been acquired here and there. I'm not quite sure how many commercial banks we have. But like I said earlier, it's not just mortgage banks that do mortgage lending. Commercial banks also do mortgage lending as well, but not all commercial banks. But some commercial banks actually do mortgage lending. So you may also want to find out if you want to access a mortgage, talk to your bank, your commercial bank, if they are doing mortgage lending. So those are the players in the primary end of the market. Then when we move to the secondary market, now these guys that play at the secondary market typically provide funding, they provide liquidity, financing for the funders at the primary end of the market. So one of the biggest players in that space is where I work, the Nigerian Mortgage Refinance Company. And like I said, in my next slide, I'm going to talk more about NMRC. So NMRC plays in that secondary segment. So I've had people who see me and I say, oh, do you lend? I need a mortgage. Can I, talk to you guys? And I tell them, well, yes, if you talk to me, I'll refer you to some person at the primary segments of the market. We are secondary lenders, so we don't lend directly to individuals. It's the guys at the primary end that lend directly to individuals. So they fund developers, they fund buyers as well. But those of us that play in the secondary market, we're not lending directly to individuals. Federal Mortgage Bank of Nigeria, they've been there long. They are also a secondary market player. They manage the NHF, which is the National Housing Fund, which I imagine a lot of us contribute to. 2.5% of your basic salary every month goes to them. So they are sitting on a huge pool of money. So let me quickly talk about NHF. Should I talk about that here? No, I'll talk about it when I'm talking about accessing loans. But Federal Money Bank of Nigeria actually manages the NHF funds, which by law, you're supposed to be putting 2.5% of your basic salary into every month to be able to access some mortgage. If you want to access the NHF loan, so you have to go through one of the primary operators, you go through one of the primary mortgage banks. To the best of my knowledge, commercial banks don't do NHF loans. It's usually the primary mortgage banks that do NHF loans. So you have to go through one of the primary mortgage banks to also access the funding from Federal Mortgage Bank, as in the NHF. Now I put the capital market here and I put it in asterisk because the capital market is not an operator per se, is a market that is accessible by in the secondary market. So when I'm going to talk to you about how NMRC operates, you see how we operate, in the capital market. But the capital market is a market where funding is made available for secondary market operator. Then at the top of that are your supervisors and your regulators. So there's a body called the Mortgage Bankers Association of Nigeria. Every mortgage banking institution in Nigeria ideally subscribes to them. They are like a pressure group, of all mortgage bankers in Nigeria. The overall supervisor of everybody within this ecosystem at the end of the day is the Central Bank of Nigeria. So CBN doesn't just regulate commercial banks, CBN regulates mortgage banks as well. CBN regulates your, what do they call this? Your microfinance banks, microfinance banks as well. So there's a department in CBN called Office of, Other Financial Institution Supervision. Yes, Office of Other Financial Institution Supervision. That is the department that actually oversees this ecosystem within the Central Bank of Nigeria. So I hope we got that ecosystem. Just to quickly do a recap. At the bottom, you have the consumers who are the home buyers or home owners. Then you have the real estate developers who could be private players or government players, governments both at the federal level or at state levels. And then we move to the markets. That is where the funding for all of this comes from. You have the primary segments where you have your primary mortgage banks and your commercial banks. Then you have the secondary players who are the likes of NMRC, Federal Mortgage Bank of Nigeria, and then the capital markets where we pull funds from. And at the top of that are the supervisors, the Mortgage Bankers Association of Nigeria, and the Central Bank of Nigeria. So let me move on to talk about NMRC now. Okay, so what is NMRC? The full meaning is Nigeria Mortgage Refinance Company, NMRC for short. NMRC is a public-private initiative between the federal government of Nigeria, that's FGN, and the private sector, created why? To lower the cost of mortgages and promote affordability of housing to working Nigerians. So when I explain what NMRC does, I like to use this sort of analogy. And let me use the analogy again this evening. So imagine Tunde wants to buy a home. And this is what used to happen in Nigeria. Tunde wants to buy a home. So I go to a bank A, say, I found this home, this house I want to buy. It's 50 million naira. They profile me. I have my equity contribution. They do all the checks. They're fine with me. Of course, if I'm buying a house of 50 million naira, they won't give me 50 million naira. Remember, I said that equity contribution or down payment. So let's say they collect 20% from me. So that means I put down 10 million, they give me 40 million, and I buy the house. Then Tunde's friend Femi also comes. I went to Tunde's estate. I liked it. There is another unit available in that estate. He's also going for that 50 million. Me too, I have my 10 million down payment. Give me 40 million. They profile Femi too. Can he pay? They look at his credit profile and all that, And then he ticks all the boxes. They loan him 40 million. Then let's say Nkechi comes too and says, that estate, I love it. I also want to buy there. I also need another 40 million from you guys. And then the bank says, oh, we are sorry. All the money we have to loan as far as mortgage is concerned is 80 million naira. We've exhausted it. If you don't mind though, Tunde and Femi have been repaying. Maybe when we recover a chunk of what we lent to them, we will have money to loan you. So Nkechi goes sulking that, oh my God, I can't get a mortgage. That was the state of play. Mortgage lenders in Nigeria, did not have enough liquidity for mortgage lending. Now, remember I was talking about banks, commercial banks doing 5 years and calling it mortgage. Why were they doing that? Some of them still do actually. This is what happens. Banks take short-term deposits. When you put your money in your current account, even in so-called savings account, it's short-term because you could come for it next month. You could come for it in another 2 months. Even maybe the worst case, you do fixed deposit of 180 days, 6 months. Now, is it smart of a bank to take 6-month deposits and go and lend for a liability of a risk asset of 15, 20 years? That's a mismatch. I mean, finance people, if we have any finance person here, I'm sure you know what I'm trying to describe. They call it a mismatch, a tenor mismatch. So you are taking short-term deposits and you're trying to use it to finance long-term mortgages. It doesn't work. So which is why the banks would rather prefer to loan money to one trader in Okeani that's give an Okeani trader an overdraft and she will pay back, by the end of the month or in 2 months' time. And you can do a lot of volumes with that rather than tying money down for Sunday to pay back over 15 or 20 years. It wasn't attractive for them. So something that was largely missing in the Nigerian banking or mortgage ecosystem was long-term liquidity. Long-term money was not available, and that was why NMRC was created. So that NMRC can actually make long-term funding, 15, 20-year funding available to people, to these banks, so that they can loan and know that, yes, we've got long-term money, not short-term deposit that we're trying to use to create long-term mortgages. So which was why they would rather do a 5 years. Even that 5 years, they were trying by giving you 5-year mortgage, so to speak. So that was what NMRC was created to come and do. So back to my Tunde, Femi, and Nkechi story. So that bank has given out 80 million naira, remember? And Tunde and Femi are repaying. That bank can approach NMRC to say, you know what, we have this loan portfolio, mortgage loan portfolio of 80 million naira, and it's performing because NMRC is not like AMCON. NMRC doesn't do bad debts. It has to be performing. So NMRC will look at the books. NMRC has something called the Uniform Underwriting Standard, which defines what we are looking at in qualifying loans. That is a loan that qualifies to be refinanced by us. If the loans of Tunde and Femi tick all those boxes, part of the things NMRC looks at is the title. Does it have a proper title? Are they paying, have they been servicing this loan for at least 6 months in your books? And all of that is all fine. NMRC will now give the bank the 80 million naira that they have loaned out. So what that means is that without waiting for Tunde and Femi to finish paying to recover all that money, that bank is able to get that 80 million naira from NMRC and create more mortgages. I'm sure we get that picture. So that is the idea, so that there is liquidity in the system. So some people call NMRC a liquidity facility. So it's a company that was created to provide liquidity in the mortgage financing segments of the market. So that's what NMRC was. And the impact of that is that by virtue of NMRC being able to provide that funding, so banks can actually go from doing their 5 years mortgage to doing 15, 20 years because the tenure of the money they are getting from NMRC is long-term funding. Secondly is that it is expected that NMRC is able to raise at a typically lower rates than what the banks. Have you tried to access mortgage from any of the commercial banks before? You are hearing 20-something%. Yes, if they are using their funds to give you mortgage, they are giving you at 20-something. They are pricing it like the regular loans that they're giving other people. But with NMRC coming to play, 2 things. They're able to extend the tenure from the typical 5, so they can do 15 years, they can do 20 years. The rates too are able to come down because now in my next slide, I'm going to talk about where does NMRC get its own money from and how does NMRC make its own money. So when NMRC is giving that bank the 80 million, it is not free money. NMRC is giving that bank at also a rate. NMRC will add its own rates to it because that's how NMRC will make its own money. NMRC will add its own rates. And then if that bank is now going to give Nkechi, they would also add their own margin to rates, to get into Nkechi's hands finally. At the end of the day, some interests have added to it, but it's still better than what Nkechi would have gotten for 5 years at 20-something%, in the bank. Now, it's not yet Uhuru. I mean, we're not yet where we should be. And I'm going to talk about a lot in my next slide, because NMRC money too is not cheap as it were currently, and I will explain why, which is one of the challenges that we're dealing with in the Nigerian system that we're playing. So it was established as a component of the Nigerian Housing Finance Program and incorporated in June 2013 as Nigerian Mortgage Refinance Company PLC. It provides mortgage lending banks with increased access to liquidity, I just explained that, and long-term funds at market reflective interest rates. Note what I put there, market reflective interest rates, and I will explain what I mean by market reflective rates in my next slide. So it is loosely modeled after America's Federal National Mortgage Association, Fannie Mae, and the Federal Home Loan Mortgage Corporation, Freddie Mac. I don't know how many of us have heard of Fannie Mae and Freddie Mac before. I mean, those are secondary mortgage lenders in the US, and NMRC was modeled after that. Who owns NMRC? What's the ownership structure? So it's majority privately owned with limited public sector stake. So the two categories of shareholders or owners of NMRC are the private sector guys who own about 60% of the company. And all this is publicly available information. You can check NMRC's website, www.nmrc.com.ng, and you'll read more about the ownership and how NMRC operates. So about 60% is owned by private sector, which are mainly financial institutions, your mortgage banks, and some commercial banks. They are actually part owners of NMRC. Then the public sector, the government institutions. MOFI is Ministry of Finance Incorporated. So Ministry of Finance owns a portion of NMRC. NSIA, the Nigeria Sovereign Investment Authority, is also another major shareholder in NMRC. Between NSIA and MOFI, Federal Government of Nigeria owns about 40% of NMRC. So NMRC is a private institution with a public sector mandate, so to speak. So at times we behave like chameleons. When it suits us, we tell people we are private, and then when it suits us as well, we tell them, you know what, we're governments. So we enjoy that dual citizenship, so to speak, oftentimes. So yeah, that's who NMRC is. Now, how does NMRC operate? And that's the schematic I have presented here, and I'm going to run us through it. I've put numbers, to them so that you can follow me. So what's the role of the federal government? That's number one. The federal government provided something called a credit guarantee for NMRC to raise money. What is this credit guarantee about? That credit guarantee is saying that if NMRC, because I'm going to talk about how NMRC raises money. Remember I told you NMRC, the banks can approach NMRC with their portfolio. NMRC will buy the loans of them, so to speak, So where does NMRC get that money from? NMRC also borrows that money. I'll tell you where NMRC borrows that money from. But before NMRC goes to borrow that money, Federal Government of Nigeria provides what is called a credit guarantee. That guarantee is saying to investors, people that lend money to NMRC, that if NMRC defaults in paying back this money they have raised from you, we, the Federal Government of Nigeria, will pay you back. Now, what is the advantage of that? What that means, when in financing, pricing of loans, risk is a major determinant of how cheap or how expensive you're able to raise finance if you're raising money, So your risk rating is a big deal. Like the other day, I saw a video. I remember my sister-in-law shared a video with me of some woman who was speaking at a conference, and she was talking about how things are unfair to African countries. And then she was saying that the United States of America can borrow at maybe 3%, but an African country wants to borrow from IMF, and they are charging the African country 10%. I'm like, this is not sentiments. It's finance. You are risky, so they price you higher. If I'm going to lend, if I'm a lender now, I want to lend money to Dangote approaches me, for a loan. I know Dangote's pedigree. That's Dangote, see his what now? I can lend to Dangote at say 5%. But if Mr. Agbabiaka and Co, without some good credit history too, wants to borrow that money, it's riskier for me to loan money to Mr. Agbabiaka. So I'll probably do 10% for Mr. Agbabiaka. So it's about your risk rating. So what the credit guarantee does for NMRC is that it helps NMRC to raise money cheaper. so that investors know that, okay, the risk is not that much because Nigeria is behind NMRC. That's the credit guarantee that the federal government has provided. So that credit guarantee is doing two things. It's telling investors that this money you are giving NMRC, if NMRC fails to pay back when they should, we, the federal government of Nigeria, will step in and will pay you. Two, it gives NMRC a better credit rating so that investors know that, okay, the risk not too much, where, it's Nigeria that is behind this. The federal government of Nigeria is behind this. So that impacts on how NMRC is be able to raise funds. So with that guarantee, NMRC goes into the capital market. Remember when we're talking about the structure of the mortgage ecosystem at the secondary level, I asterisk the capital market. So that is where NMRC raises money from. So NMRC goes to the capital market and issues what is called AAA rated bonds. And the reason why NMRC is able to issue AAA rated bonds is because it has that federal government credit guarantee. So NMRC is actually able to raise bonds at the kind of rates that the federal government of Nigeria itself is raising money in the capital market. Now, that's good news, right? NMRC is able to approach the market with confidence and raise money at relatively cheaper rates. But how cheap is this money? Nobody in that market will borrow you money lower than the rates that the federal government of Nigeria is borrowing money. When we're talking about borrowing, we're talking about bonds now. Have you invested in federal government bonds before? Those bonds are going for double digits now. I probably should have checked this with my treasury guys before I came on this call. But I don't know. But I imagine federal government bonds are in the double digits, say you're 10, 11, 12%. So hypothetical scenario, NMRC goes to the market. The best rates we're able to raise money is the same rate federal government is selling their bonds. So let's say we raise at 12%. No, let's say we raise at 10%. There were times it was down, it was like 9%, it was like 8%, but let's say it's at 10%. That already determines at what rate that money will eventually get to the borrower. So let's assume NMRC was able to raise that money at 10%, which was the best we could get out of the market at that time. So we raised, let's say, 1 billion naira at 10%. What that means is that, who are those investors? Yeah, another person may ask, who are these investors that buy NMRC bonds? They are mainly your PFAs. So your PFA, your pension money is not sitting idle. There was a time people were peddling one story that, the government has borrowed all our pension funds. And I smiled. Of course, government is borrowing our pension funds. Where do you think your pension money is being invested? Is about 60% of it, if you check PENCOM guidelines, about 60% of it or thereabouts goes into federal government security. So federal government is borrowing it and paying back at an interest. So the money is not just sitting down idle. No, the biggest players in Nigeria's capital markets now, especially in the bond market, are the PFAs. They are the ones that have, and pension fund. Remember when I was saying that the problem with banks being able to lend to mortgage was because they couldn't access long-term funding, because their funding was just, all those short-term deposits that they take from people. But long-term money pension money is long-term money. People will typically have like, say, 20 or averagely. If you do an average, of course, some people are closer to retirement than some others. But if you do an average of all the people contributing to pension funds, maybe the time to retirement comes to about 20 years or so. So that's long-term money sitting down there. So that's money that people like NMRC are able to access. That's where we're able to raise that long-term fund. So when we raise it, so let's say we have raised it at 10%, then we can now on-lend to these guys here. Those your mortgage banks or your commercial banks. I just dumped all sort of logos here, as well. So actually, when NMRC started, NMRC was only working with a group of banks that were called member banks. Those were the banks that invested in NMRC. Remember, I said NMRC is like 60% owned by financial institutions. So those were the only banks we were working with based on CBN guidelines. But later that has been relaxed. CBN has said, okay, they don't even have to be banks that have invested in you. Any bank that has a portfolio that qualifies for your refinancing, you can refinance them. So NMRC is now able to give that money to those banks. Remember, I said theoretically we raised at 10%. So we had our own margins to it too. So let's say we had 2%. Now I don't know, how that pricing works really. But let's say we had 2%. So we give to those banks at 12%. So those banks are now able to grant loans to Nkechi, they will add their own margin. So let's say they add another 2%. So Nkechi, Usman, Chukwuemeka, Shola, all of them are able to now get mortgage at, let's say, 14%. So currently, I've done my checks lately. Currently, most people at this end, from these banks that access NMRC money, they are getting at about 19% now. Now that's still crazy, right? That's still high. Before the MPR increases here and there, MPR detects how interest rates goes up and down in the market. Earlier in the year, it was reaching the hands of the final borrower at about 15%. At least between last year and this year, people were getting mortgages at about 15%. But these days, if you're just doing a fresh, you're probably getting at around 19%. Now, that isn't so exciting because ideally, you should be getting mortgages at single digits, right? Your friends in Canada, US, UK, they get their mortgages at single digits. But even over there now, mortgage rates have gone up. So typically, people were doing 2% are now doing as high as 6%. And you may want to check, you may want to check. People there are doing at up to 6% from their previous 2% previously. So anyway, in Nigeria, so you are getting it around, say, 19, let me say between 15 and 19% now, which is not very fantastic. But if you look at where we're coming from the regime of 25%, well, it's still way better than that, right? But it can be better. So you can see that for this whole ecosystem to work better, something has to change around here, the general interest rates in the market. If that can come down, then the final borrower here too is able to access money at cheaper rates. So they give the money to the borrowers. The borrower doesn't go home and say, thank you. It's not grants, it's loan. So they keep servicing their loans. They keep paying back. So like the Tunde and Femi example I give, Tunde and Femi won't stop paying back because NMRC has given their mortgage lender money. No, they keep paying back every month. As they pay back to that lending bank, that bank sweeps the money back to NMRC because NMRC needs to recover its money. Remember? So they sweep back to NMRC, NMRC pays its investors. That is how NMRC operates. So we raise the money there, backed by federal government guarantee. We look at the books of the mortgage lenders, they meet our requirements, we give them the money, they grant loans to the borrowers, borrower keeps repaying, the bank sweeps to NMRC, NMRC is able to pay its coupon holders, that's the investors, and NMRC also makes its own cut out of that. So that is how NMRC operates in that market. So how can you own a home in Nigeria? I mean, you work in Nigeria, you own your business in Nigeria. How do you get a home? So the first one I said, inheritance, right? Yes, people get homes, they inherit homes. If you're fortunate enough, your dad or your mom, somebody can just will a home to you. Or you can win lottery. I put a smiley there, yes. It's funny, but yeah. I once consulted for a company that actually, they really didn't have a headway. Their model didn't exactly work. But what they wanted to do was to actually be making people, they will do lottery, people win homes. And so their plan was that they will sell enough tickets. People like lottery now. So maybe they sell tickets of 50 million and one person will win the house of 30 million. You get the logic there. That's the kind of thing that they wanted to do then. I think they did for a few months, but it just didn't work out and they folded up, sadly. But yeah, some people do lottery and they say you win a house. So you can actually inherit a house, you can win a home by lottery. Number two, self-funding, which is actually how a lot of people end up building their houses. Our parents, for example, is self-funding. So if the money you have can buy one block, you buy one block today, put the block, wait for another 2 months, you hit some jackpots, you carry it to lintel level, wait for another 3 months, God bless you, you have money to roof, like that. There is a quote that I had from someone, it says, cities grow the way they are funded. If you do an aerial view, if you are flying into, let's say Lagos, for example, if you're flying into Lagos and the plane is descending low, during the day, not at night. During the day, it's descending low towards that Ikeja, the airport, MMA. You will see uncompleted buildings a lot. If you sit by a window and your plane flies low enough, you be seeing all those uncompleted buildings. The reason is because a lot of buildings are self-funded. So people just save up as the money comes, they save up to try and own homes. And that's how a lot of Nigerians have owned homes over the years. And some people go into cooperative. Cooperative societies too are good. There are cooperative societies that they will buy land, or they will buy, some estates. A lot of government agencies do that. They have a lot of staff. Or CBN, for example, CBN has a very strong cooperative that buys properties a lot. There was one estate that I bought into in Abuja some years ago, and they'll tell you, I remember they used to tell us then that a whole wing or so of the estate had been bought by Nigerian Customs Cooperative Society. So that is actually, so if you work in a place where, there's a lot of staff, a lot of personnel like that, those cooperative societies are usually strong. Some of them will buy land, so you can actually buy land through the society and then you start building. Some, they will actually buy the houses and they have, how they allocate and get their members to pay for it. Number 4 here is mortgage, which we have been talking about. You can take a mortgage. Now let's talk about NHF here. I said I was going to talk more about NHF earlier. Now, what is NHF? The Nigerian Housing Fund. It's a creation of law. So it is backed by law and it is managed by the Federal Mortgage Bank of Nigeria. The law says that any organization, I think hiring maybe 2-3 people and above or so, is supposed to contribute. So each employee in that organization and self-employed people too are supposed to contribute to the National Housing Fund at a rate of 2.5% of your basic salary every month. So imagine how many people are contributing to NHF in this country. So NHF is actually sitting on a lot of money. And guess what? NHF loans are the cheapest available in Nigeria. I stand to be corrected. It's 6% and it's fixed. It's 6% is fixed because it's cheap money. What's the cost of raising that funds for Federal Mortgage Bank? 0. Well, maybe just the administrative charge of printing passbook, having offices. Yeah, okay. So let me not say 0. There are some administrative costs to it, but that's money that comes at 0%. You don't charge, when you remit your money, you don't charge them interest. You have to do it. You remit to them straight. So how does it work? It's 6%. You are able to access it if you have contributed for at least 6 months. A lot of people don't take advantage of this. It's there. If you've been contributing and you've never accessed, you are cheating yourself, really. Try and access it. Now, I know there are issues around NHF. Number 1 is you can only access 15 million naira. That's the maximum you can access. Even if you have contributed 20 million, of course, for you to contribute 20 million, you must be a very high earner. You've contributed for so long. So you probably wouldn't have contributed 15 million. But you don't have to contribute 15 million. You just need to have contributed up to 6 months, whatever it is that 2.5% of your basic salary is. Once you have proof that you have contributed up to 6 months, talk to a primary mortgage lender. Talk to a primary mortgage bank that does NHF, because some of them will tell you they don't do NHF for whatever reasons, but find one that does NHF. By the time you talk to 2 or 3 mortgage banks, like I said, I don't think commercial banks do NHF, it's mortgage banks, By the time you talk to 2-3, you'll find at least one that will be willing to help you process NHF. Typically, they will also tell you to open an account with them. You pay, I think, 100,000 first as processing fee. That one is for the bank, not for Federal Mortgage Bank. And then you start filling all sort of forms. But like I said, the issues here is that the maximum you can access through NHF is 15 million, but it is very cheap. It is 6% interest rate. The cheapest you can get in this Nigerian market is 6%. And the tenure is also good. The tenure for NHF loans is retirement age, 60 years typically, minus your current age. So if you're a 40-year-old, you can access NHF loan for 20 years. At 6%. If you do the maths, your monthly repayments is probably, depending on how much, so let's say you're borrowing 15 million at 6% for 20 years. Your repayments every month is probably less than 50,000 naira, So yeah, that is NHF. Another challenge with NHF, which discourages a lot of people, is the bureaucratic bottlenecks. I've processed NHF before. I've taken advantage of NHF. I think it took me like a year. Yes. I think they are getting better. But let me not raise your hopes too much. You need to be patient if you're going to access NHF. maybe 6 months at the earliest. That's what it looks like. But by all means, I encourage people to go for NHF. You can even get the NHF and get, the other mortgage I'm going to talk about. And by the time you blend it, your effective rates. So if, for example, you are getting the regular mortgage from a mortgage bank at 19, maybe you want to buy a house that will cost, that is 30 million, you took 15 million from NHF. So for NHF too, you need to also have equity contribution. I think they've lowered that to like 10% now, but I think typically they will still do 20%. Sure. So, but let's say you want to buy a property. So if, for example, you want to buy a property of 30 million, with that, you can access the full 15 million because your equity contribution of 20%, let's say you do 20% equity, that's 6 million. You need to borrow 24 million. So your mortgage bank can help you access the whole 15 million from NHF, and then you go and look for your 9 million. So let's say you get 15 million of NHF at 6%, then the bank itself is able to give you the remaining 9 million at, say, they are 15 or 19%. By the time you blend that, your effective rate is probably around 10, 11, 12%. So that is also something we try to encourage people that you can actually take advantage of both. So the second one is, talking to the primary lenders that NMRC can even refinance, at the end of the day. And that's what I was describing, that you can actually take both for a property. But there's also a bit of a challenge to that. At times, because NHF, if you take NHF for a property, you remember we said for mortgages, the property is the collateral. So Federal Mortgage Bank will receive the title. They will hold the titles in their names. And your bank too, that is giving you the other one, may be saying that we need to hold the title. So that's where it gets a bit tricky. But typically, if you are working with the same bank, if it's the same mortgage bank that helped you to process NHF, that is also giving you the balance, from their own lending, they may be able to consider that, okay, we processed NHF for you and we know where the titles are, and it may fly that way. So don't sleep on NHF, really. That's what I'm trying to say. Don't sleep on NHF. It's not a lot of money because, hey, how many decent houses can you get for 15 million in Nigeria, in Lagos or Ibadan or Abuja? Very, 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 very few. Very few houses, but still get it, whatever you can get. And then you can approach the primary lender themselves, to give you a mortgage, like I said. Then there is something these days that, then some developers, yes, I should say, some developers too, you probably see, they help you to access NHF. They will tell you they will help you, but they will have to work with a bank, a mortgage bank, to access it. So there are some, as they are developing and they are telling you to come and buy, they will tell you that we can help you access NHF. Yes, they can, but not directly. They are also working with a mortgage bank that will access the NHF for you. Then there is rent to own. So these days, some developers have come up with the concept of rent to own. That is, you rent the house, but the rent you are paying is like your mortgage, repayments. And after a particular period, the house belongs to you. I think that makes sense, really, because instead of just paying rent, and I know this is going to my landlord, if I know I'm going to own the property at the end of the day, cool, then I prefer that. So there are also different schemes that different developers are coming up with these days, trying to make home ownership a much better thing. I said any other, there's just a whole lot that I hear about developers in my office, developers coming here and we have this product, we're trying to do it this way and all of that. Just be sure that you're doing your necessary checks before subscribing to any of those. So those are ways by which, you could own a home. So what are those challenges? So if you decide to go the mortgage route, what are the challenges to getting mortgages? Number one is the equity. To even build that equity safe. So, and I'm sure some people have been thinking about that. Let me go back to my 30 million house example that I've been using. So you want to buy this house for 30 million. You've approached the bank. The bank says that you need 20% equity. So 20% of 30 million is 6 million. 6 million is a lot of money in Nigeria. It's a whole lot of money. So for a lot of people, that's even the number one problem. Where do I get my equity contribution from? Now, recently, PenCom said that you can access 25% of your RSA balance, right? But the question is, would that even still be enough? So let's go back to this, our 30 million house example, right? I want to buy a house of 30 million. You need 6 million as equity. PenCom is saying that you can access 25% for that down payment. So if let's do the maths. If 6 million is 25, that means your RSA balance is 24 million. Do you get what I'm saying? You want to you need 6 million as down payment. And Pencom is saying, yes, 25% of your RSA balance, you can take it as down payment. That 25%, for it to be equal to 6 million, that means the 100% you have should be 24 million. Question, how many people have 24 million naira sitting in their RSA balance? If you do, you are creme de la creme. You are top of the peak of the Nigerian working population. Yeah, you are most likely at least managerial level in a very decent paying bank, oil company, any of those high profile, institutions, and you've been contributing for quite some years, for you to have 24 million naira sitting in your RSA balance. I'm not saying they don't exist, though. They do exist. I'm an HR manager, I know. They do exist. But I'm saying that those are the creme de la creme of working class Nigerians. So that is actually, so as much as we all celebrate the 25%, I think is good. Is better than not even being able to access anything. But the reality is that if we look at the value of the kind of properties people want to buy, it's still a far cry. But you can say, even if your 25% comes to 2 million, by all means, collect it. If you're looking for 6 million and you've seen 2 million from your RSA, does that not reduce what you're looking for? The main thing you're looking for is 4 million. So yes, by all means, get that as well. So let's say you've been able to go get over the challenge of equity. You've been able to raise your 6 million equity. You have now borrowed 24 million naira. Another challenge is that number 2, the high interest rate. So you've borrowed 24 million naira at 19% for 15 years. Let's see what you're going to pay. So I want to quickly do a simulation for us. I'm going to pull this up on my screen so we see. I hope we're seeing my screen. Please, just to be very sure, someone can just type in the chat box so I'm sure you're seeing my screen. So remember, you've done the house you want to buy is 30 million. You've done your contribution. Thank you very much. Yeah, thank you. So you can see. Yeah, thank you. So you've done your equity contribution of 6 million. Now you are borrowing how much? 24 million. Please ignore the dollar. I mean, this is just a template I could pull up. We had the dollar sign in it. So it's naira we're talking about. So you are borrowing 24 million naira, right? At 15% per annum for 15 years. That's the tenure. Number of payments per year, 12, because you are repaying every month. You're repaying every month, right? So number of repayments in a year is 12. Starts date of loan. So let's say you took the loan in October 2022. Now see what this has thrown up. I already plugged in this figure so that I don't waste time, in this. So we're borrowing 24 million at 15% interest rate per annum for 15 years, paying monthly. You started in October. Your repayment schedule, your loan summary, every month you are paying back 335,900. If we even do the 1/3 rule, that's for any loan, your repayment should not be more than 1/3 of your net take home. That means for you to take this kind of mortgage, your net take home every month should be, I think that's about 1.1 million naira or so. So you should be earning at least net 1.1 million naira. Someone says the analysis is not displayed. I don't know what the analysis is. What I'm showing is the Excel sheet with the figures. And I think others said they can see it. Someone is saying she's not able to see it. Charity is saying the analysis is not displayed, but some other people have said they can see it. So Charity, I don't know, maybe you want to refresh your page or log in, log out and log in. But I think others can see what I'm doing here. Oh, I can't see the Excel. Someone else is saying I can't see the Excel. Okay, if someone can see the Excel, please. We cannot see the Excel. Oh, really? Okay, so what have you been saying? Okay, just a minute. Just a minute. Since most people can't see the Excel. Okay, let me. We can see your screen, but not the Excel page. Oh, I see. Okay. Okay, sorry, just a minute. Let me. Oh, okay. I'm so sorry. I'm so sorry. Let me know if you can see it now. So just put it in if you can see the Excel sheet now. I'll wait to get a confirmation. Okay, cool. Yeah, thank you very much. So you can see it now. So this is the Excel sheet. So let me quickly run over it again. So I'm saying that you're borrowing 24 million. Remember we said you want to acquire a property of 30 million and you've put down 6 million. So you're borrowing 24 million at annual interest rates of 15% for 15 years, paying monthly. That's 12 payments in a year. You took it in October last month. So what's the summary? Every month, you'll be paying back 335,900 naira. For you to be able to pay a loan of 335,900 naira monthly, if we apply the 1/3 rule, which says that for any loan, your repayment should not exceed 1/3 of your net take home every month. That means you are taking home at least about 1.1 million naira every month for you to be able to access 24 million at 15% over 15 years. You're paying back. Someone is saying I can no longer see the screen. Can anybody still see the screen? Yes. Okay. At least I'm sure people can see the screen. But in any case, even if you can't see the screen, just try and pay attention, listen to what I'm saying. Yeah, thank you. Okay, I can still see the screen. Okay, so pay attention to what I'm saying. So what I'm saying is that for you to access 24 million naira loan, mortgage loan at 15% interest rate for 15 years, your monthly repayments will be 335,900 naira. And for you to be able to take that, that means you are earning at the minimum about 1.1 million naira every month. So you can see that that is still the issue with that high interest rates brings. So it's a general Nigerian problem. The day we're able to achieve lower interest rates, single digit interest rates in the market, mortgages will become more affordable. But that doesn't mean you should give up on mortgages. I'm also going to, just show you some tricks around, how you can manage this. So this shows that your total interest, by the time you pay this for 15 years, you would have paid an interest of 36 million. Okay, so I said 15% or 19%. I use 15% for this simulation. If I put 19%, it even makes it worse. If I put 19%, your monthly repayment goes to 403,800 naira. So I was just trying to use like a best case scenario by saying 15%, That's why it's 15%. So you can toggle it and use 19, but I'm using 15% for this simulation. So you are paying 335,000. If you keep paying that every month for 180 months, which is 15 years, you would have paid back a total interest of 36 million naira. Add 36 million interest to 24 million that you borrowed. That means in your 15 years, you would have paid 60 million naira on that mortgage. So which is why the trick is usually to do bulk payments. So yes, if it's convenient for you, every month you are paying back your 335. But let's say in January next year, they pay you housing up front in your organization, and then you put in 1 million. You do a bulk payment, an extra payment of 1 million into it. See what has happened to your total interest here. Your total interest has dropped to 29 million from 36 million. So that is actually one of the advantages of doing bulk payments. Another thing that has happened is that your number of payments has reduced how many months you need to pay from 180 months down to 157 months. So that's actually a trick with, taking mortgages or even any type of loan. If you have, some good chunk of money, just drop it in. It will reduce what your total interest at the end of the day will be. So I just wanted us to see how those figures work. So like I said, does this mean you should now not take mortgage? Because somebody's like, yay, 335,000 naira, how much is my salary? And all of that. Of course, if you don't earn as much as the 1.1, then you probably can't even, the bank won't give you this money because they would have profiled you before they grant you the loan. But even in all of this, there is still an underlying advantage that a lot of people don't pay attention to. in mortgage. And I'm going to go back. So let me go back to my slides. Okay, I hope we can see my presentation. I'm back to my presentation. Please just tell me please on the chat box if you can see my presentation. I don't believe you can see my presentation. Okay, yes, thank you. Good. So let's go back to it. So you remember I was talking about number 2 thing I talked as an impediment is the high interest rates, which we just simulated with some numbers. Another impediment is property titling. So a lot of properties, some people will tell you, come and buy house, come and buy house. They don't have C of O, they don't have R of O, they really don't have titles. Now, a property that does not have title is what they call a non-bankable property. You can't access funding from a bank with it. So titling is another major issue. I've also wanted to buy a property before in Abuja, you know, that I asked, it was nice. I loved the estate. My wife also liked it, but the title, they didn't have a title. And I knew that, well, if I wanted to buy cash and carry, if I had all the money, fine, title will probably not be big deal because it's my money. But if I'm looking to access mortgage from a bank, the bank will want to see proper title. So property titling is also another issue that impedes people getting mortgages because the banks want to be sure of the title that you are bringing. Poor credit history. If you've been defaulting on previous, maybe you collect one small loan from somewhere. Now, a lot of people don't know. We have mortgage, we have credit registry in Nigeria. And with BVN now, all of this is linked. So some people say, I collect quick credits from GTB. I move on to Access Bank. They know your credit history is tracked very much now in Nigeria. So poor credit history is also another problem with people getting mortgages. Then the last one, I said culture. Culture in the sense that some people still see mortgage as taboo. Why should I own a house by collecting debts? God forbid, God forbid, God forbid. Me, debt-free home. I must buy my house, cash and carry, you know. I mean, it's good. I'm a Christian too. I want to have a debt-free home, but debt is not bad. Mortgage is, in fact, mortgage is one of the best type of debt you can actually have. And I'm going to show why in the next slide, you know, the advantages of taking. So it's still a cultural mindset, you know, for some people in Nigeria, but that is actually fast changing anyway. So let's look at what are the benefits of taking mortgages. Number one is faster route to home ownership. So between me that I'm able to access a mortgage and Mr. B, who is going the route of, I get one money today, I buy 1,000 blocks. Then I wait for another 3 months, another money comes, I raise it to lintel level. Me, once I can, you know, raise my equity and I don't need to have all the money. So if I'm buying our 30 million house that we've been saying, I don't need to have 30 million to buy that house. As you can see, what I just need to have is 6 million. With 6 million, I can buy that house of 30 million. Whereas my other guy is still waiting to build 30 million to be able to acquire that house. So it's a faster route to home ownership. Leverage. The idea of leverage is that, still back to my 30 million example, with 6 million, I've been able to acquire a property of 30 million. That's a leverage. So I have been able to leverage 24 million out of that. And guess what? Number 3, the value of that asset appreciates. Now, that's the part a lot of people don't pay attention to. So remember the example I gave with borrowing 24 million at 15% for 15 years. And we looked at it at the end of that 15 years, you would have paid 60 million naira. Some people like, hey, this mortgaging is robbery. So I borrowed 24 million and at the end of the day, I've paid 60 million. But guess what? If you buy a house of 30 million in whatever your neighborhood is, in 15 years, can you imagine the value of that property? People buy houses like 2-3 years ago and appreciation, maybe like another 2 years, it's appreciated by 10%, you know? So depending on where you bought that property, especially God help you, government has now done good roads there. There is some good infrastructure there. By that time that you are looking at, I've spent 60 million on this, that property is probably worth 120 million. So the underlying asset itself is appreciating, and that's a major benefit of taking a mortgage. So yes, it looks like I have this debt on my neck, but you have an asset that is appreciating. And guess what? You could come out of the mortgage fast. How? You may sell the property. So yes, it's not technically yours because the title is still with the bank, but you can tell the bank, you know what? I have found a buyer for this property. I took 24 million naira from you, right? The property was 30 million 2 years ago when I took the loan. Now in this same estate, they are selling this my house for 50 million naira now. You can sell it off for 50 million naira, pay off the bank, their 24 million naira, and you have 26 million naira that you can use to do something else. Some people who are actually good around finance, they actually do that's leverage, leveraging debt. They do a lot around this. I have a colleague. This guy bought a property in Abuja. He took mortgage to buy it. He was explaining to me his mortgage repayments every year comes to about 4.8 million. I think he said every month his repayments is maybe about 400,000. So in a year, it's about 4.8 million what he pays. But guess what? He actually rented out that property. It's a bungalow. It's a 3-bedroom bungalow with a BQ somewhere in Guarimpa. He rented it out for 5 million. So you see what is happening? The house is paying back its mortgage. So he's not stressing himself to service that mortgage. The rent that he's collecting from his tenant is paying for that mortgage. That guy has another house in Lagos, that's he lives in. So he's making that rental income. That rental income is paying back the mortgage. If he decides to sell that house, I don't know how much he bought it. I think he bought it about 22 million or so. Then I imagine he'll probably sell that house for double that price now, and he can pay off the bank and still have his money. So that's an underlying advantage of mortgage that a lot of people don't pay attention to. So you are focused on this money I'm paying a lot though, but you have an asset that is appreciating, which you can come out of the loan and sell it and go and buy another one. Some people do that. They even make it a business. Sell that one, pay off the bank, buy another one, and all that. Number 4 is tax relief. As HR practitioners in this room, we need to actually educate our staff on that. According to the PITAM, Personal Income Tax Amended Act in Nigeria, mortgage interests, so the interest you pay on your mortgage every month is tax deductible. That is, you can claim it as tax relief. So if you have a mortgage or you have a staff that has a mortgage, let them know. They should send you the schedule. They should send you the offer letter from the bank that shows that, yes, they have this mortgage from the bank. Plug in their monthly interest into your tax computation, and that is a relief for them every month. I think there's going to be another session by 7, so we need to quickly wrap this up. So I have to run. Improve credit rating. Now, maybe that's not a big deal in Nigeria, but in the West, where your credit rating is big deal, if you have a mortgage and you're servicing your mortgage, as you should, it improves your credit rating and you're able to access, better credits. Then the last one, I said, why pay rent when you can own? Some people are paying rent that is more than what they'll be paying on mortgage. I'm sure you know people like that. Even in this Lagos, there are people who, are renting some houses. Yes, is it tax rebate? Yes, it is. You can claim it as a tax relief. So every month you just plug in the interest alone, no, not principal, just the interest alone. If you plug it into your tax table as relief, it will reduce the tax that person will pay. And it's acceptable. LRS accepts. The only caveat that LRS puts is that you can't claim that relief on 2 mortgages at a time. You can only claim it on your first mortgage. So if you have taken a mortgage on a residential property and they say it has to be owner occupied. So like that example of my friend that I said he has mortgage on the property in Abuja, he's living in Lagos, it doesn't qualify. It has to be the house you are living in and your first one that you bought. So you can actually claim tax relief on that. That's how it works. And I'm sure if you're on the HR group, Oluwemi will probably share my contacts. You can reach me personally and I can walk you through how that tax relief works. But it's something that you can really take advantage of. Just like you can also take advantage if you have life insurance, your personal life insurance, the premium you paid the previous year is tax relief. So why pay rent when you can own? Some people are paying 5 million naira monthly as rent. No, not monthly, it's not that bad. Annually as rent. Such a person can see the example we did. The total annual repayments on that mortgage is just about 4 point something. So why pay rent when you can own? You are just paying rent and giving the money to your landlord. The house will never become your own. Why not use that one as your mortgage repayment? And you know that it's a property that comes back, that is your own eventually. So this is my last slide so that we can wrap up this. So as an HR manager, as an HR professional in the house, what can you do to help your staff own their homes? Number 1, I said, encourage and support them to access NHF. encourage us, especially if you have been doing the contributions, encourage them and help them through the process as well. If you also need, well, not like I process NHF, I don't process NHF, but at least I can refer you to one or two persons, that can help. I understand one can request for refund on NHF contribution if the loan is not accessed after retirement. Is this possible? Yes, absolutely possible, 100% possible. And a lot of people too don't, that's from Joy, a lot of people too don't pay attention to that. If you retire and you have been contributing to NHF and you never borrowed NHF loan, you can go and collect back your money and they should be paying you back at an interest. Although this is Nigeria, the process of getting it back is another long story. I once helped somebody who retired from my organization to access. At the end of the day, you just had to accept what they gave you. You didn't get the full money, but at least he got some. No, two people actually, two of them. They couldn't get their whole money because NHF started saying some records were missing here and there. Anyway, they gave them something. So yes, you can access your NHF contribution if you never borrowed NHF money. Can we have the recording at the end of the show? Sure, this is going to be uploaded on the YouTube page, on Yemi Adeosun's YouTube page. You can get it there later. So support your staff to access NHF. If you need contacts, you can buzz me on the HR group. I can refer you to some fellows I know in some of these mortgage banks who can help you process your NHF. Okay, yeah. Then educate them on the tax relief opportunities. The one I just said, that if you have a mortgage, your interest is tax deductible, so you can claim relief on your mortgage interest. Start a cooperative. If you have the numbers, you work in an organization with maybe 100 people or thereabouts, you can start a cooperative. I'm not a guru at cooperatives, but I know that you need to register cooperatives too. There are cooperative licenses, and people have done a lot of good things with regards to home ownership with cooperative. Number 4, you can convince your management to create and fund a home ownership scheme. And I dropped 3 ideas here that you can sell to your management. Number 1 is housing loans at concessionary interest rates. Banks, a lot of commercial banks in Nigeria, they'll say once you are, I think, manager or senior manager and above, you can actually, it's part of your benefit. You can access loan from the bank at a lower interest rate. So while they are giving loans to people outside at 20-something%, they give their staff, I think managers or senior managers, I think it's usually senior managers, they do senior managers and above, maybe at 5% or something. And what they do, I think I like the idea. Once you leave the bank, they convert it to commercial rates for you. It goes straight back to commercial rates. So you know that benefit, you're enjoying it as a staff of the bank. So you could also push for something like this if your organization is able to afford it, because it also comes at a cost. If your organization is able to afford it, you could actually push for that if you don't have it. Another one is prepaid housing allowance. So in some organizations, they pay housing upfront every year. Some organizations do housing, some banks do housing upfront. So I know of an institution in Nigeria, an organization in Nigeria, where from managers and above, they allow them to access 10 years housing allowance as mortgage loan at, I think, 2%. I have a friend who is a manager, I think he's a senior manager now there, and he actually acquired a home in Lagos, using that. So where he works, they give him 10 years housing, your annual housing allowance. You can access 10 years at a go to go and purchase a home. Now, I put a caveat here, terms and conditions must apply. Terms and conditions, because you don't want to pay somebody 10 years money and the person collect that money and jackpass, the next month. So typically the kind of terms is the title will be in the name of the company. So the property is in the name of the company. Some of them will even ask you for guarantors and all of that. So you need to be sure that you are protecting your organization. So you're not just telling your MD tomorrow that, let's give staff, mortgage loan. You need to protect the organization as well so that people don't carry your company's money and run away. Somebody says, got an info that BVN is now required to register employees with FMBN. That's what I mean. Yes, it is. I just want to confirm this is valid. It is very, very valid. You need BVN, as part of their registration requirements. Yes, I still did for some people last week, and we had to provide their BVN. So yes, it is valid. Then the last one with some organizations. So these days, some organizations, even some banks will say, no, we don't want to use our money. Like the risk, there is risk in the housing loans, the 1 and 2 that I just described, that is give the staff housing loan at concessionary rate, or you prepay 10 years housing allowance, is risky. For some people, even though you collect the title, you do this, you say you are paying directly to the developer, you're not paying to the staff. Some people still find a way to carry that money and run away. So some organizations these days will say, no, we don't want to take that risk at all, and we don't even have the money. Go and deal with a mortgage lender. Go to a commercial bank or a mortgage bank. Go and collect your mortgage. Let them profile you. Let them do everything. But we will subsidize your monthly repayments. That is one that I think for me, out of these three, that's the one that best protects your organization. And it may be one you may want to consider if you don't have any of these schemes in your organization. This will appeal to your management because the risk for your organization is almost zero. You are not using the company's money. The staff is going to meet a bank to collect loan. If the bank profiles him and they say, yes, you meet all our terms, they give him the loan. What the company is just doing is that, okay, you are paying 15%. We will help you with 5% out of your 15% every month as subsidy. So every month, give us proof that you have paid this loan this month. You've given us the proof. We compute 5% of it. We'll give you a subsidy. So at least that helps to reduce the burden of paying 15% or 19% on you. And the day you leave the company stops paying that subsidy. So that is another option by which organizations may help their staff in accessing mortgage. And you may want to sell that to your management as well. I think it's something that most CEOs would like because, like I said, the risk to the organization is zero, so to speak. You're just paying, and you are the staff has to provide evidence. So you're not just giving them the money up front. Is upon provision of evidence that I've serviced this loan this month too. Since you've serviced it, then we give you the subsidy, maybe 5%, maybe 10%, to just help you cushion. And with that, ladies and gentlemen, I have come to the end of this session. I hope we've had a great time. I had to rush through it towards the end because I remember that it's meant to be another session by 7 o'clock. But maybe very quickly, if there is one or two questions I can quickly take, you want to speak or you want to put it in the chat box, I can quickly. I know I've been answering some questions that have been dropped in the chat box already, but if there is maybe one or two that we can quickly take before we end this session. Thank you.
Thank you very much, Mr. Tunde. Thank you to the audience. If we have questions for Mr. Tunde, please, can we raise up our hands? We can only take a few because we have another session for 7 p.m. If you have any questions.
I see a question. Someone is saying, where are the 30 million naira homes? So that was theoretical, but in reality, I'm sure you can get 30 million naira. I'm sure you can get some 2-bedroom bungalows for 30 million naira in some parts of Lagos, Abuja, Ibadan. I'm not a developer. I know a lot of those terrace, 4-bedroom terrace duplexes along the Aja axis in Lagos. These days they're going for like 60 million. But yeah, if you talk to developers, I'm sure they have all those options. I think somebody has a hand raised.
Yes, one Elizabeth raised, but dropped again.
Okay. Only let me say we need to end now, please. So it's fine. I think if you have questions, you can reach out to the organizers. And I think my LinkedIn profile, so my name is Sundewale Temo. You can check me up on LinkedIn and send me a message. I'll be glad to respond to you as well. Yeah.
Thank you so much, Mr. Sundewale Temo. Thank you so much, Deborah Dumbri, and everyone who joined this call. In the next 1 to 2 hours, this session will be uploaded online in case you want to watch it or you want to share with friends and loved ones who missed it. Thank you so much. Please join us by 7 p.m. for change management for HR professionals. It promises to be exciting and interesting. If you'd like to join the HR community, HR network, let us know. We'll share details with you on the group chat in the next few minutes. So we'll end the session right away. Thank you so much, Tunde.
All right.